Hello and welcome to the Wealthy Trades Daily Market Forecast. This is Tyson Clayton, and today is March 18th, 2015. It is Wednesday. Let's start out by going into actually recapping yesterday's price action. Yesterday we had a pretty aggressive down move in the market. Shouldn't have surprised anybody. The daily dashboard or market trend quality score at thewealthytrades.com was down aggressively. Many of the stocks in the S&P 500 are still on a downtrend. Yesterday, if you remember, the quality score was below 50%, so we did recommend a hedge trade, okay, which is actually good because it was a little bit of a mixed market, all right? We were down quite a bit in the Dow and the S&P, but the NASDAQ, the tech stocks, actually rallied pretty decently yesterday. So it was a tough day, and anybody who took a directional bias may have picked the wrong market or the wrong direction. So what we did is we did a pairs trade. If you remember, we went short in the XLE and long in the XLU, and overall it was about a break-even day. We made a little bit in the XLU and we lost a little bit in the XLE. At one time, midday, the both trades were doing very well. So if you manage those, and in fact, you could have potentially managed using the levels to win data. You could have done very well. So anyway, that was yesterday's trades. Again, yesterday's price action is a perfect example of why you need to use the Wealthy Trades dashboard. You need to understand the sectors to go into, how to hedge yourself, because again, you could have gotten into a lot of trouble yesterday. If you were a tech, let's say you're a tech trader, you trade in Nasdaq stocks or the Nasdaq itself, and you look and you said you had a short bias or a bearish bias, well, you know what? The tech stocks rallied yesterday. Whereas if you were a Dow trader or an S&P trader, um, and let's say you rolled in and you had a bullish bias, because remember Monday was a big day up, well, you got hurt because the Dow and the S&P 500 fell dramatically. So again, you got to understand what you're doing. You got to use the tools, the Wealthy Trades dashboard, to help you get your directional bias, and then to help you hedge your trades in the right way. So anyway, today let's roll in and figure out what we're doing today. Today we are in a downtrend, and we've got 53.2% of the stocks in the S&P 500 moving in the direction of the trend. So we have a bearish bias, and we're going to be confident in that bearish bias because the quality is above 50%. Now, it's not dramatically above 50%, but it is above 50%. I'm expecting a lot of volatility today, and this volatility we've had recently doesn't surprise me because we have a Fed meeting that's happening this afternoon, and the whole entire market is going to be glued to the statement from the Fed, from Janet Yellen, seeing is she or is she not going to remove the words patient? Is she going to change some of her verbiage? And if she does, what does that mean for the stock market? Now, you got to remember, a lot of this rally we've had in the last 3-4 years is because of easy money. It's been to inflate risk assets and prop up the economy, and that's exactly what it's done. Now, I can make an argument that it really hasn't propped up the economy and grown the economy, the real economy, right? Jobs and wages and like it should, but it has absolutely worked in propping up and inflating risk assets. So it's done its job. Now I believe the Fed is between a rock and a hard place, because the economy is starting to get better. Jobs look like they're starting to come in. Wages are not coming in, so therefore there's deflationary pressure. But is the Fed going to continue on their pro-inflationary environment type of policy, trying to prop up risk assets in the face of a decent jobs market? I think they're going to. In fact, I think if you look at the data, there's absolutely no reason to be thinking about raising rates right now. And the reason why is because, again, until incomes rise, and I've been saying this for a long time, and you can follow me on Twitter and Facebook and LinkedIn and all that if you'd like, but I've been saying that until incomes rise, we're not going to see a true big inflationary environment. So therefore, the Fed has a mandate to stabilize inflation and stabilize the dollar. And yes, the dollar's been on a big rally, and that's because there's been deflationary pressures around the world, and incomes have not been going up. Technology obviously plays a role in driving costs of goods down, different things like that. But anyway, so they are stuck between a rock and a hard place. It's going to be very interesting. We've been in a market of very, very low volatility for a very extended period of time. In fact, I'm going to do a video today on, I'm going to dive into the volatility index itself, the cash volatility index, and I'm going to give you some stats. This will be on our resource tab, and I'm going to do some stats on how, the last time the volatility index has been this low for this long. And what I mean by that, not above 30 for an extended period of time. What happens and how long does it typically stay that? And I think this rally is starting to get long in the tooth. But anyway, today is going to be an interesting day. We are going to have a short bias as I'm looking at the futures right now. The futures are down. The Dow futures, S&P futures are down about 7 points right now. Same with the Dow, down about 70, 80 points. So anyway, let's get rolling. We are going to be focusing on the short side. We are going to be confident in taking the short positions in the best sector in the direction of the trend. That XLB is the best sector, so the material sector is what we want to focus on. It's actually a good sector, especially in a Fed day, because that's very rate sensitive. All right, it's materials, it's commodities. Very much inflation or deflation is going to affect the material sector. So I'm going to hit the plus symbol next to the XLB to put it in my portfolio, and then I'm going to bring over all the stocks, or the best 8 stocks within the material sector, and we're going to find the best trades for today. And this is the process that we do every single day. So let's start with, I'm gonna keep the XLB, as you guys may know. I keep the XLB even though it on the counter trend side, when it hits that level, it doesn't have a tendency to continue to go. But so that's not, I'm not a huge fan of that, but I'm going to keep it because it is the best sector. But here's what I'm going to do. I am going to eliminate any of the stocks that don't have a profit, that don't make a profit on both sides on the levels to win profit. So on the trend side, when it hits this trend side level, it needs to make a profit. When it hits this counter trend level, it needs to make a profit. And as I can see, SEC does not make a profit. When it hits the trend side, it does not make a profit. So therefore, I'm going to eliminate that one. MWV does make a profit on both sides. Not a huge profit, but I'm going to keep it for now. I might eliminate it in a minute here, but MOS makes a profit. FMC makes a profit. DD does not. I'm going to eliminate that one. BLL does not. I'm going to eliminate that one. AVY does not. I'm going to eliminate that one. ATI does. I'm going to keep that one. And then the XLB will obviously keep. All right, so now we're going to drill it down even further. If you remember our drill down analysis that we use, we want to look and on the trend side. Okay, so let's look at ATI, for example. So ATI has a 53.8% probability. Let's go to the chart so I can kind of show you this on the chart. So I'm going to drill this in and customize this. So the expected upside for today, okay, and for some reason the chart didn't change. Give me a second here. There we go. Oh, it's changed. Okay, so on ATI, the expected upside, and no, okay. Anyway, the expected upside today on ATI is $30. The expected downside today is $28.90. Well, it's got a 53.8% probability of hitting that downside. That's good. That shows that it has a tendency, when it's in a downtrend, there's a tendency to trade in that downtrend and hit the downside level. That's what we want to see, because we're going to look to short or structure short positions in ATI. And then we're going to use this data to help us structure those short positions. Okay, so this is great. It's got a high hit rate on the trend side and a lower hit rate on the counter trend side. That's great. That shows the power of the trend, by the way. The other thing that I want to see is I want to see that it has levels on levels close. So this levels on levels here tells me how often does it close lower than this level. And what I want to see on that is I want to see this levels on levels essentially being half or more, 50% or more of the times that it hits. So what I mean by that is, and this is exactly 50%, but what I mean by that is when it hits this level, this 28.90, well, this is out of all the times, 100% of the time, 26.9% of the time it closes below that when it's in a downtrend on a Wednesday. Well, 53.8% of the time it hits that. So when it hits that, if it closes below that 26.9% of all times, I know that when it hits it, and it closes below it, and it closes below it on a 26.9%, that's 50% of the time, or at 50% of the time. When it hits this, it closes below. That's good, and I can also see that it makes money when it hits that. On the counter trend side, what I want to see is I want to see that when it hits this $30 level on a Wednesday in a downtrend, so the counter trend level, I want to see that less than half percent of the time. So when it hits that level, all right, it only closes above that level 9% of the time. So I want to see that between the levels on levels and the HPP, this has got to be less than half percent. So on the trend side, it's got to be more than half or more. And the counter trend side, it's got to be less than half. So this one's perfect. It has a profit on both sides. On the counter trend side, when it hits this level, less than half the time that it hits it, it closes above it. That's good. That's a great shorting area. So short at 30. Also, on the trend side, half the time that it hits it, it closes below, plus it makes a profit. So that's a good area to short, and shorting at the open. So therefore, we've got 3 entries on ATI. Short at the open, short at $30, and short at $28.90. And hold it until the end of the day, close it at the end of the day. ATI is a phenomenal shorting opportunity. FMC is also great. It's more than half on the trend side. It's profitable on the trend side, and it's less than half on the counter trend side. It's profitable. This is again 3 shorting opportunities. Short at the open. If it hits 59.85 and it rallies up and hits that level, short there. Or if it falls and you're already in the short, you can add to your position or just structure a short position at 58.95. This is a phenomenal opportunity here too in FMC. So ATI and FMC look great. Moss, I'm going to actually eliminate Moss, and here's the reason why. Remember, on the trend side, when it hits the trend side, we want to see that it closes in the direction of the trend more than 50% of the time, and as I can see, it doesn't. When it hits this level, it hits it almost 60% of the time, but it only closes below it 25% of the time. That's less than half, so therefore I'm going to eliminate MOS. MWV. MWV does close. MWV meets my requirements. Doesn't make a ton of money here, but it does more than half the time. It does when it hits it, it closes below it. That's good. It doesn't make a ton of money. That's not a huge issue, but here's the thing. MWV is one I'm going to keep. You can short at the open. When it hits this, if it rallies up and hits 51.94, you can short there. That's a great shorting opportunity. And also, if it hits 51.02, you can look to add to the position there. I wouldn't. I'm not as confident as I am in FMC and ATI, adding to the position on the trend side, but I am going to keep that one also. So the best 3 stocks within the material sector to go short in is ATI. The plan on ATI is short at the open, short if it hits the expected high, or short if it hits the expected low. FMC, same thing, short at the open, short if it hits the expected high and the expected low. And MWV, you can short at the open, short if it hits the expected high, and you can also short if it hits the expected low. I just wouldn't. I'm not as confident in that one as I am the others. And then the XLB, just so you know, XLB. Let's look at the stats on the XLB itself. Computer's running a little slow today. The XLB itself, short at the open, it hits the trend side on a frequent basis. That's great. So you can hold this all day long. One thing that I would do though is short at the open. You can also short if it hits 48.97. The expected high today is 49.55. So here's what I would do if when I do go into the XLB, because it loses money there. If it hits 49.55, I'm going to use that as a stop level. So I will get if it hits 49.55, I'll use that as a stop. And if it doesn't hit that, I'll hold it all day long. And I'll look to short at the open and also short if it hits the trend side. So that is the game plan for today. Again, to recap for the week, we are in a pairs trade. We're long the XLU and short the XLE. Very simple trade that we're in. Whoops. Long the XLU and short the XLE. In that and on the monthly basis, we are long the XLV. So that is the game plan. Thank you for listening. Make sure that you drill into the charts and play around with this. If you have any questions, you can email me at tysonclayton@wealthytrades.com, and we'll talk to you tomorrow.